Good morning, good morning, good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Monday, November 30th, 2009. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London, 12:30 p.m. in Hamilton, Bermuda, and in Mexico City it's 10:30 a.m. If you need to reach us, you can call in during the show toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. On this day in history, Winston Spencer Churchill was born at Blenheim Palace up in England in 1874. He died in 1965. We have some breaking news. Insurance Insider is reporting the following. I'll read it. Aon is poised to integrate its retail, specialty, and facultative reinsurance operations into a new global division, Aon Broking, to facilitate greater control over its premium income and portfolio. The new division, first revealed by our sister title Inside FAC, will be jointly headed by Warren Mula, M-U-L-A, current chairman of Aon's U.S. Retail, and Elliot Richardson, CEO of the company's facultative arm, Aon Benfield FAC. It will control, distribute some $40 billion of the group's placed premium income and will establish key broking hubs from which clients can access global markets. The hubs will be London, Bermuda, New York, Chicago, and Singapore. And the story comes under this title, Aon set for major restructure. We'll follow that in the next few days, I'm sure. Meanwhile, the rest of the economic world is bye-bye Dubai. Today, Nakheel, Dubai's property developer and part of the heavily indebted Dubai World conglomerate, asked NASDAQ to stop trading its bonds. The bonds have already been taken off the Dubai bourse. Markets in Dubai fell this morning 7.3% by the end of the day, actually. Some major securities, including the construction and banking shares, fell to almost the 10% maximum allowed limit before they would have been halted trading. Dubai World announced Wednesday, of course, that it would seek a 6-month freeze on debt repayments of about $60 billion. According to Al Jazeera, it's been a bad day here, referring to Dubai. The bourse dropped 5.6% instantly. Analysts said before they opened that anything more than a 3% drop would be a disaster, so it hit that. Shares in Abu Dhabi Securities Exchange, another of the UAE's 7 Emirates, dropped by 7.5% early on Monday. Abu Dhabi said yesterday that it would shore up Dubai's finances on a case-by-case basis, while the United Arab Emirates said that it would offer emergency support to the region's banks. Abu Dhabi has already provided $15 billion in assistance to Dubai this year. Nakheel, which put its trading on halt, said that it halted trading in 3 Islamic bonds until it can provide the market with a complete picture about its own restructuring plans. The bonds are worth about $5.25 billion. The U.S. stock market is down about 25 points right now. In some reinsurance news, market sources are telling Reinsurance Magazine that Aspen and Ariel, both based in Bermuda, are close to signing merger agreements. Although the sources did not detail any financial part of the planned combination, which would see one of the world's biggest combined Bermuda-Lloyd's operations in Bermuda. Other market sources said that it was likely that Aspen was purchasing Ariel. Aspen has a market cap of about $2.17 billion US, and its share price has recovered over the course of the last year up to about $26 plus. According to other London market sources, Aspen is the 3rd suitor Ariel has had this year. All 3 times companies have done due diligence on Ariel, but backed out. Aspen declined to comment, and Ariel has not responded to any inquiries for comment. Meanwhile, Max Capital, another Bermuda reinsurer, has ruled out a possible merger with Harbor Point. Max ruled out any merger, a suggestion that had been the subject of Lloyd's market rumors in the wake of the company's decision to pull out of its IPC merger. That, of course, was trumped by Validus. Max declined to comment. Harbor Point could not be reached for comment. In Shanghai on Saturday, an MD-11 crashed at the main Shanghai airport, taking off from Pudong. 3 Americans were among those dead. The plane of the type pictured here, although I should emphasize this is a Finnair livery. It was not a Finnair plane. It was a Zimbabwe plane, but this is an MD-11. The plane was bound to Kyrgyzstan from Shanghai. It burst into flames shortly after hitting a building just after takeoff. According to the American Embassy, there were 4 Americans on board. 3 of them are confirmed dead, and 1 is still in very serious condition. AIG is the lead insurer, supposedly, on the Shanghai crash. Sources are adding that HSBC was the broker for the plane. The insured value of the plane was $65 million, with a total loss only value of $2 million US. Well, Swiss Re has come out with their annual CAT study. They say that the low level of damage from the recently concluded 2009 Atlantic hurricane season means that CAT losses for insurers dropped all the way down to $24 billion for 2009, less than half the total recorded in 2008. The figures, of course, are preliminary because there's 32 days left. Cited windstorm Klaus as the costliest event of the year. That was about a $3.5 billion hit. The absence of any major hurricanes, only tropical storms Claudette and Ida made U.S. landfall this year, means that industry losses were significantly below those recorded last year, even with a February U.S. winter storm with losses of about $1.3 billion. Some of the other notable events: July hailstorms across Switzerland, Austria, Poland, and the Czech Republic cost insurers about $1.25 billion, while 2 other U.S. storms, one in April and the other in June, are both estimated to have cost the industry more than $1 billion. The series of typhoons which struck the Philippines in August and September claimed about 2,000 lives, but many of the losses were uninsured. More than 1,000 people are either dead or missing as a result of the Indonesia earthquake at the end of September. We'll now go to a word from our sponsors and come back with the rest of the news.
Every day, the world wakes up and goes to work, pursuing the unique opportunities that lead the global economy forward. The complexity and close connectivity of today's global marketplace is a true modern miracle that can create unparalleled success. But it takes confidence, passion, innovation, and understanding.
Enabling opportunity.
Protecting capital.
Engineering innovation. Investing in your future.
Ensuring continuity.
Finding the right balance.
It takes Aon.
Seems as if the Somali pirates off the east coast of Africa have actually managed to seize a supertanker loaded with oil. The tanker pictured here is a Greek-owned tanker called the Maran Centaurus. It was carrying crude oil from Jeddah, Saudi Arabia to New Orleans in the U.S. The ship has 28 crew members on board. It's a 300,000-ton ship. The crew is thought to be consisting of 16 Filipinos, 9 Greeks, 2 Ukrainians, and 1 Romanian. Officials could not immediately say how many barrels of oil were on board, but its value would be in the hundreds of millions of dollars. This would only be the second time that the pirates have ever managed to seize a supertanker. According to Andrew Mangura from the East African Seafarers Union, this is a jackpot for the pirates. In November of 2008, pirates hijacked the Saudi supertanker Sirius Star that had about 2 million barrels of oil on board, valued at about $100 million US, and the ransom that the Saudis paid for the ship's freedom was $3 million.